What is going on, everybody? And in this video, we are talking about the state of the market in my picks for Friday, January 14th, 2022. If you haven't done so already, go ahead and subscribe. If you are into stock market analysis, I do fundamentals and I do use technicals as well to try to give me the best edge in the market. So if that sounds good, let's go ahead and do that and drop a like button while you're there. Now, let's get started as far as state of the market. Today, we pretty much just sold off. We came in hot overnight, had a nice gap up on a lot of different things, primarily on chips. TSM did very good and essentially destroyed it. And then from that point, chips ran, well, not chips particularly, but semiconductors ran like crazy today or this morning, and then things changed. Lyle Brenner was in front of the Senate today. I don't know if that was the trigger or not. On the daily, there's a lot of different things that look like they were coming into strong resistance. But being said, we are starting to get in earnings mode. So given that, I wasn't really expecting any information that she was going to say to change anything. She came out, was talking to the Senate, and essentially reiterated everything that Powell was saying. Yes, there's inflation. I mean, it's the same song and dance. Nothing has changed. But the market decided to sell. But technical wise, I could have seen where we got rejected, which it looks like we did, and we just started selling off. There was no particular news. Yes, cases of COVID are rising, but I don't believe anything to do with the cases of COVID are affecting the market. To this point, nothing is affecting the supply chain unless something comes out where there are lockdowns, like I've stated before. Then we'll start getting issues with supply chain, and then we'll start seeing it actually affect the market because you're starting to dive into something more than just headline news. You're actually diving into people's pocketbooks at that point in companies' essential earnings, and so that's when it matters. So going forward, going into tomorrow, typically, any kind of earnings, we do have a dip going into earnings. So that could be what this is, because we haven't really started earnings. Tomorrow, we're going to start getting some of the bank earnings, which would be led off by JPM tomorrow. That will kind of help, I think, ease the market. And then next Tuesday, we're going to start getting more bank earnings, so that will really help. But being said, the following week after that, we're going to start getting a lot of big tech. You got your Microsoft and Apple. And then the next week you have Facebook, your Amazon, Tesla, Shop have not come out and stated when exactly they have earnings, but it'll be sometime in one of those 2 weeks normally. So we'll have to see. It could even be next week. I highly doubt that. Normally, even Tesla gives at least a week or two in advance. I know last time they did Q3 earnings, I think they came out, I think it was like a week and a half before actual earnings, and announced their earnings date. So being said, again, I'm not really concerned. There was no real reason to be selling today. So even given that, as you can see, we've come right into the trend line. We really don't want to break this 46.48 mark tomorrow. If we open below this, the daily opens below this, it could be an issue. We could actually do some bigger selling here. Again, you have to look back. Even if you look back, you really look at this market, that is not really even a pullback. Ever since essentially April of not last year, but the year before, since the pandemic, we have, with the major injection of all the money, we have gone essentially straight up. And something I have always talked about is that we have to retest old support for us to actually have strength. This is a very parabolic move. It's a very historical time. Being said, technical wise, this is not good. Technical wise, we need to be retesting on the way up and not just go straight up. Now, that also being said, yes, at some point we will sell. When will that be? I figured rate raises would be the first thing to give us a true correction, because last year we really had a very diluted pullback is what it was. It wasn't even a true correction all year. So that being said, coming into this year, a lot of things have been accelerated as far as, okay, well, now we need to just start doing some tapering. A lot of different things are coming in. And as far as COVID and all that goes, that is still very much a possibility, only if from, if what China is saying, if it's true that they're taking COVID very seriously and start locking stuff down and affecting supply chain, which their chain feeds a good portion of our supplies, we're going to be in trouble. The whole market's going to be in trouble. And so that could be a true catalyst, but we have to see what's going to happen from this point. So again, ultimately, I mean, since then, even on a Fibonacci level, even to our all-time highs here, you're not going to get some major correction overnight that's going to, get us all the way back down to 38.11, which is just 38%, not even the 50% mark. So it's going to be a long time before you actually get any kind of major pullback like that. But even if you look over the years, which I don't even have to bring up right now, but we're always going to go up. And now, with all that being said, a couple of years that Trump was president, there was a lot of volatility, but now it's just pure parabolic with all that money injected. So we really have to see. You have to be cautious at some level. And one thing to keep in mind, one thing I've been reiterating over and over, is every time that we've hit all-time highs, we haven't been there for perhaps a couple hours or so, and then we just start selling. We've been like slowly pushing up. It almost seems as if we are really running out of gas. We hit all-time highs, then we kind of chop, then hit all-time highs again, and then we just sell. So we hit all-time highs, chopped, and fell. And now it looks like we're retesting the trend. So again, we really want to hold this trend on the daily. If we can't hold this trend on the daily, it could be bad. So everything that I was thinking was happening in March seems to be being pushed up until this point. But being said, with the earnings coming out, earnings mode does drive the market, and that could have been very well, we got that initial bounce, which was a relief bounce because we did nothing but selling. That could be a dead cat bounce, very well could be, but it really depends on how we hold here, if we hold this or not. If we don't hold this level, we can do some massive selling from this point. Again, we can come down pretty far and still be bullish on the market. I mean, the market's always going to be bullish. It has to go up, considering everything that's at stake. If the market does not go up, there's pensions, retirements, 401ks, everything gets destroyed if the market just goes to shit, pretty much. So there's a lot worse problems out there. So being said, SPX, a critical day tomorrow. We want to see if it holds. We're going to get some bank earnings. Maybe that will give some relief. Again, if there's no true news to anything, a lot of the news we're getting is the same old stuff. Even with the Brainerd stuff, it was the same old news. There was nothing new. There was no reason to sell, but yet we did. So there is something else driving the market. Maybe it's just a pre-earnings move is what I'm thinking, because if there's no news, that means people are just preparing for something to come, like an earnings move. So I can see that everything's kind of setting up for next week. But being said, we still have to be cautious. I think after this earnings, even if there's not a rate raise, I think there will be a correction. And normally we have some sort of correction around that February-March time period. So you have to be careful of that. I think even if it's not, the market will just have a fit at that point and correct on its own. So being said, again, SPX, I have to see how tomorrow plays out. Hopefully it holds. but we will see. Bitcoin still holding. It actually looks like it's holding a wedge. We really want Bitcoin to hold this 40K mark. I think it's still very solid. Again, if there's really inflation concerns, it's only going to drive Bitcoin higher. And with all the mass adoption and the government trying to tax cryptocurrency, it's here to stay. So being said, again, we want it to hold this 40K mark. It could still come down closer to the 30K mark, actually. So roughly 33 and still be bullish. So I'm not really too concerned. It's a pretty solid support right here. So again, I think this year in preparation, again, you have to realize there's still very bullish. There's still a lot of money. There's no way. There's just so much being said. And that's what I don't like about this market is there's so much being said, but there's actually no action. And so people are panicking off of headline news and not actually realizing that even though the Fed say something, their actions will take months to actually happen. Now, unless they come out with emergency rate raise, which is something they said they would do if need be, if necessary. But again, Powell still feels it's transitory. He just doesn't like to use that word because people get very mad if he uses that word. But it is still very much transitory. But it is transitory unless China comes out and says, we are locking down, affects supply chain. At that point, it's going to be more than a transitorial issue. So you have to understand that is what we're looking at. And like I said, the market changes day to day. You have to be comfortable with this. Yes, we're going through a period of a lot of essentially craziness. There's a lot of volatility in the market because we're living through a historical time. You have to remember that. You may be seeing parabolic moves and seeing all these people make this big money. To understand that this is a very historical time. There is more money in the market. What do they say? 40% of the U.S. money has been printed last year. So being said, that's just not going to go away. The Fed may have a plan, but the Fed is never fast on acting on these things. And so being said, we have to see how it plays out. And so stuff will change day to day, and stuff is very sensitive because there is a lot of uncertainty. We've been writing this thing for almost 2 years now, very close to 2 years now. And we really haven't corrected much since the money's been injected, and that is an issue. But how long will it take before we do have a good correction and pullback and start testing some of those old supports? So Bitcoin, I'm still very bullish on. We'll have to see how that plays out. So going into tomorrow, Tesla is key. Right now, what you need to focus on is the companies that are actually doing that almost for certain that they are doing very well. Tesla has reported fantastic numbers on car deliveries. Their earnings will be great. They are just selling in a lot. That is your indicator to say, hey, well, there is something really going on here. There's really something massively going on and wrong here. And so Tesla, again, selling off like crazy is not a good sign. It just means the market in general is really weak. Tech is weak, especially after this parabolic move for it to just sell like that. You could actually say that there was a head and shoulders play. It played out. So we'll see what happens tomorrow. I don't think it'll dive back down to 900. I'd really like it down around the 900. I would really load heavy if it made it down to 900. But it held the 1,000 mark. So we're watching that tomorrow. If we do get that low, again, if the SPY breaks tomorrow, I can almost guarantee we're going to break through that, and we'll head pretty far down after that point. But I think it's just a pre-earnings move at this point. But we won't know for sure until it plays out, and we'll see. So also into tomorrow, I think ASML had a monster move. I actually swung this overnight, so I captured that massive gap up. But being said, this really looks good. It looks like a wedge retest, like an actual official retest. So you're kind of looking at that 730 mark. So tomorrow, if the market holds and starts pumping, you want to watch ASML. You want to watch TSM, right? They just crushed earnings, right? TSM just crushed earnings. ASML's got earnings next week. These ones will be pumping if the market's going to churn. If they are not churning, if your Tesla, ASML, and TSM are not pumping tomorrow, that is a sign that it's an issue, that the market is going to come down more. So being said, there's a lot of key takeaways we have to get from tomorrow. What is the true driver that is driving the market down? Is it just a pre-market or a pre-earnings correction, which again always happens? You always kind of get that no reason to sell kind of movement just before earnings, and then coming into earnings, everything starts running, much stuff starts getting reported, or we stay stagnant. So we have to kind of tomorrow, I think, get a better feel of what that's actually delivering, and going into the weekend and into next week with more bigger earnings. So again, Tesla is another big one. Chips you want to watch. Apple you want to watch. I think Apple's going to have a big earnings. You want to watch that 168 mark roughly. Right now it's at a good support. I don't know how long you might get first bounce out of this tomorrow and get a retest back up to that 175. But again, typically if that does happen, you normally get more selling. Now you do want Apple to hold essentially that 168 mark tomorrow. That is extremely important. If Apple doesn't hold that, which I think it will, you want to look at the things that have strength now. And one thing I noticed today, I took a position in Apple on the first retest of this, and I got out before the dip. I actually made a small profit on that one. Took a small loss on Google though. Google came out exploding, got rejected right off the 20. It tried to make a comeback and then just died off after that. And Google is very strong as well. These have, over the past week or so, Apple and Google and Tesla have really kind of been leading tech. Microsoft has really just been dying. So if these aren't holding, that's your indicator that the market will not hold. BA had some awesome news today, and they had some awesome news today, and they've been working up. I guess they got another contract with China or something like that, I believe is what it was. But if BA is holding, that just means there's a rotation. It could be inflation concerns. Maybe that's why. But as long as BA and the banks are holding, the market will hold to some extent. Now, if the banks give way, which tomorrow, if JPM does bad, the whole market could come crashing down, or they could explode. So you definitely want to start playing stocks that have volume, stocks that have momentum. Aside from that, like right now, it's going to be very difficult, I think, this year, because you're going to get a lot of back and forth with rate raises and with a massive amount of money. I think there's no way until we actually get that first rate raise, we're going to be going through this back and forth and sensitive to information until they figure it out. But again, tomorrow, your biggest things you're going to watch: bank earnings, JPM tomorrow. How is BA doing? How is your big tech doing? Tesla, Apple, your chips, ASML, TSM for semis. You want to be looking at that stuff and seeing where they're going. If they are not gaining traction or selling, that is your indicator that the market's going to keep going down for the short term. Again, you have to take it every day by day. You have to look pre-market and see what has strength, what does not. You got to watch the rotations and see what's going on. And it's extremely important, because this market has been very volatile. And if you can't tell just from this, these wicks have been absolutely ridiculous, because the market doesn't know which way it wants to go. So for you, it's hard enough to guess the direction of the market, but when the market doesn't even know where it's going and the whales don't even know what they're doing, you get all these massive wicks, and this battle, tug of war back and forth does not help. This even looks like a wedge, rising wedge here for a breakout to the downside is what it looks like. So we have to see, because a lot of patterns haven't even been playing out like they should technical wise. So we'll see what happens tomorrow. Again, watch those are keys to watch, and then we'll take it from there on the weekly update. So thank you for watching this far. If you have, hit the like button, and I'll talk to you guys later.